leaking insider stock trades every day until they stop us. We had 154 new insider trades come in. Almost all of them are going to be totally useless, but let's look through them and find some that could be high signal. Remember, we're specifically looking for unscheduled and abnormal insider trades. These mean we're ignoring things like tax sales, dividend reinvestment, etc. We want something abnormal, unusual timing, a strong story, flipping from buying to selling, etc. And then if the insider has good returns on their previous trades, that's a big win. And then the size and quantity, if multiple insiders are buying or selling, can be a big win. And then of course the price action, if the insider is buying the dip, selling the rip, something like that can be very interesting as well. So we had 154 come in. As you can see, far more sales than buys, which is pretty normal, but we are pretty low. I mean, this is going to be one of our lowest days. Under 10% of all of the insider trades that came in were purchases, which is going to put us on the lower end of things here. Not crazy normal. We had lower, or at certain times here earlier in 2025, but it is going to be low. And if we look, we're coming up towards the end of the quarter here, and we're going to fall well under the average 25% over a quarter, and we're going to be under, about 20, maybe under, which the last time we were that low was back at the end of 2024, and we did have a pretty bad start to 2025. However, we've got Trump as president. He definitely doesn't want the stock market to go down, and, lack of insider buying is not as strong of a signal as huge insider buying like during COVID or during the second quarter of 2022, where stocks took off after both of those. So definitely a little bearish, but nothing too crazy. So let's go take a look now at the top insider trades. We will set this to bullish only because we're going to start with purchases. Let's get the most recent ones. We'll sort by transaction value, and we're not very many insider purchases coming in, obviously. Now you'll notice it's 23, which is a little higher, but on these charts, we do filter out some of the scheduled ones, if they're tax sales, if they're too small, that kind of thing, just to try to get rid of some of the noise here. So if we take a look here, it looks like we've got starting out with a purchase agreement here at Next NRG. Purchase agreement dated September 18th. So they don't really tell us much about what this purchase agreement was. With the CEO could be interesting. Let's go see if there's maybe any news or anything we can find. So if we take a look at the stock price, well below the 200 day, so definitely in a downward trend here, but and down 50% in the last 3 months almost, and in the last year. So looking at, with the big dip though, insiders buying the dip can be a positive signal, so that's always something. In this case though, when you have momentum working against you, you definitely want to figure out what the story might be for why they're buying the dip, which we'll see a couple other stocks later or at least one other stock later, where the buying the dip might actually make sense. Unfortunately, not going to have much news here. Lovely. Apparently we're not getting any news or press releases from them, but we can see a couple recent 8Ks that were filed. So this one's just telling us about the purchase agreement, which they're not really saying. Yeah, they're not going to tell us much about that. This is also going to be the purchase agreement, which just happened. The actual Form 4 filing. Press release announcing unaudited financial results. So they just recently announced some results, it looks like. Pretty late to be doing it, but pioneer in AI-driven energy innovation, transforming how energy is produced. So pretty hot, very, very hot sector. A lot of revenue growth, so could be interesting. Company's rapid scale up, while August reflects a 9% revenue decrease. So that's going to be a little, they're up year over year, up a ton, but slowing down a little, it seems like. They're actually falling, which is not normally something you want to see. Looks like though they're not going to tell us anything about there's no manager statement or anything. I don't know why they released that so late after, almost a month after the actual earnings call. A lot of new shareholders recently, coming out of this journey, blah, blah, blah. Mission, bought a bunch of trucks. I'm not seeing anything sticking out. He's not telling us a ton. So I don't know what this one, I don't want to spend, hours on this video going over this. Let's actually see what the summary looks like, if it'll tell us anything useful. Fleet size. Company added 99 trucks and expanded easy fill to 15 markets, growing commercial pipeline, attracting interest from utilities and governments, long sales cycle. So this is actually one we might see in a different one. Trying to sell into the utilities and governments. Investors get very, very annoyed waiting for those super long sales cycles to actually go through, but could provide, a good catalyst when they do actually go through. Expected break even in the coming quarters. Planning to raise some capital, which is always, those dilutive capital raises is always going to be a downside on the stock. So I would there's nothing standing out here about why maybe this dip buy would happen. You don't like to see revenue declining in these kind of growth story stocks. Is the news going to load? Oh, we do actually have some news that'll load now. See if anything. So we got an initiation here, which you could probably, I'm sure if you've looked on Twitter or something, you might be able to find what this analyst actually said. But not a ton here just from what we can quickly see. I'd go read through some of those filings just to see if you can come up with a good story for why this insider might be buying the dip. But I do think it is notable just that there's been no insider buying in like a year, right? Over a year, very little. The last few ones, I guess they were all this guy selling. So first buy in over a year is notable. 1.6 million is notable. Looks like it's the CEO's largest purchase ever, which is notable. But you got to figure out what the story might be here and why things might turn around, because right now momentum is working against you. So move on. Summit Capital Management continuing to buy Ace of Gold next decade, which we already talked about, but it's nice to see people, insiders, continuing to buy. It looks like we actually have 2 new insiders here. At least 2 new insiders buying the stock, which is interesting. So Nvidia Bancorp is another one where just during IPO not too long ago, we've talked about 100 times. Stock's been going up ever since we started talking about it. Same with Saba Capital buying Ace of Gold. We've been talking about it since way back here. I've bought it and mentioned I've owned this and a couple other gold stocks for quite a while. Stock just continues to go up. Momentum totally in gold's favor. The Nvidia Bancorp, another one. I don't actually know the story so well, but they've continued to buy there. Next decade, we see these 2 executives buying the stock, and or these 2 directors buying the stock, and then we'll see a whole bunch of other insider buying here now, closing in on $9 million after the stock drop. We already talked about this one before, so I'm not going to go into the details again, but basically a bunch of analyst downgrades up here. A bunch of analysts downgraded them, and that their stock is now down here. But now you have all the insider buying. Basically, the stock reacted to the analyst downgrades, and now you have all the insider buying after the analysts have downgraded, where insiders are kind of like, all right, this doesn't seem like the stock should probably be trading down here. We have more confidence than the analysts in the big Rio Grande project. So that, I think, is definitely an very interesting insider buy, but you can look at, we went into more detail in a different video. Aspira Women's Health is kind of an interesting one here, because this is these purchases are part of, which I don't actually know if they'll tell us. I don't know why. Normally they would tell you down here, so I don't know why they do, but you can tell by, well, one, just I guess the main thing you can tell is by the person buying both warrants and the stock right here, that this was probably part of a capital raise, because normally that's the only way you get warrants. You get warrants and stock is when you're doing it as part of a capital raise. So we can go take a look at the stock. The stock's been just recently crossed the 200-day moving average, which, so that's, as far as momentum goes, now in positive momentum. They are up a ton since, they closed down here somewhere around in the 20s. They're already up over 40 cents. So they're up over 100% now just in the last few months, though still over the last year down 40-something%. So they began trading on the OTC back in April. Back around this time basically is when they started trading. So whoever bought them right when they got on the OTC markets is doing quite well. But the whole kind of main story here that makes this interesting is those purchases were part of the stock offering. Basically, they did a capital raise, but we can see the details of the capital raise. Not gonna let us see the details either. Well, let's look at something else first then, actually. Can't look at the filing, but we can see the press release. So press release, $2.95 million pipe, $112,000 in warrants exercised. So they get a little over $3 million. But what they tell you, which I guess which we saw from the thing, from the filing as well, but the warrants each unit is comprised of a share of common stock with 75% of a warrant, and then the warrants on top of that, the warrants have a price of 75 cents per share. So we're at 44 cents. They paid 45 cents for this unit, which includes the stock plus a warrant at 75 cents a share with a term of 5 years. So the stock has to get above 75 cents per share for these warrants to even be worth anything. So normally the capital raises you want to avoid, for the most part, on average, they tend to be for companies that need to raise a bunch of cash, aren't doing too well financially. In this case, probably still have the similar situation. The company needs cash, but it's kind of interesting because the stock is up so much already, over 170% or about 170% in the last 3 months. Yet the insiders are still buying the stock without a discount at the actual price, though the quote-unquote discount they'd be getting, the deal they're getting is they're getting 75% of a warrant, and the price of the warrants is 75 cents a share. So they need the stock to go up quite a bit for that warrant to be worth anything. So a ton of momentum going into this stock, basically, in which case, the capital raises, if it's used well to be able to generate more money for the company, could be interesting. So that's why in this case, I think this is a fairly interesting, though obviously very speculative, and $18 million market cap, going to be very volatile, high risk, high reward type of opportunity, but I think it's pretty interesting. And we'll look at one more here, which I wanted to look at was Anterix, which this is another one where we've got the CEO buying for the very first time, this time actually ever though, not just in over a year. CEO's buying for the first time ever. We can see here the latest news. They announced some leadership changes, which obviously can always be a catalyst, and it looks like they've got a new chief marketing officer. They have a new chief financial officer. Looks like the chief financial officer here is leaving the company. So some management shakeups going on there. The stock is also, these insiders are going to be, or the CEO, I guess, who's the insider buying, which the CFO that just left or got fired, or they don't really tell us, bought a little tiny bit of the stock I guess $1,000 doesn't really mean anything, but $100,000 by the CEO here for the first time. Stock down a ton, as you can see. We'll go look at, and we can go see, obviously going to be well below so the momentum is not in their favor. So now, right, the question is always going to be, well, what is the reason why this might be a turnaround? And I think the two interesting things going for it here are obviously the CEO buying for the first time. Executive changes, it's kind of always hard to know exactly why they might be doing that, but certainly can just mean a realignment of vision, or maybe getting rid of an executive that's not living up to expectations, especially considering that the CEO actually just came in a year ago. So we've kind of got a new regime a little bit, if you will. You can look at news. I don't think there's any news besides what we were already seen. Price target cut by an analyst, certainly going to cause some problems for the stock, but they claim they're making the executive leadership changes to power the next phase of growth, which is also nice to see. But then really, if we go to a transcript in this case, we can actually see one thing that'll be interesting is he's mentioning, today I'd like to focus on 3 key elements that we believe uniquely position us to scale effectively, blah, blah, blah. 1, the continued progress of our accelerator program. 2, our financial strength. And 3, the growing utility validation of 900 megahertz broadband. Now, what's interesting is these 3 key elements actually are slightly different than the 3 key elements from just a quarter ago. We announced 3 important initiatives. First, optimizing our cost structure, which was one thing they already said. Second, the Anterix accelerator, the other thing they said. But then the third, the strategic review process that Morgan Stanley is leading. They do not mention said strategic review process anymore in this one, right? They instead focus on the utility validation of 900 megahertz private broadband. Now, the whole reason this company is down so much, 40% in the last year, is because this company is trying to sell spectrum, or license spectrum to utility providers. It takes forever to get utility providers to actually agree to any of these deals, and investors are tired of waiting. So the stock is they've just been selling as none of these deals are coming through. So the whole thesis here, the whole turnaround thesis here, is that some of these deals are maybe going to come through now that you've got the CEO seeming to buy the stock. You also notice they mentioned no more mention of strategic alternatives, which they mentioned somewhere down here in the Q&A. Let's see if not that one, one of these Q&A questions. Obviously we're waiting on signed deals. We are in a strategic alternatives process. Can you give us a sense, is that an active process, or is that on the back burner? So this is the strategic alternatives I mentioned before, and he basically says it's active, but it's passive as far as I'm concerned and as far as the board is concerned, because at the levels we're at, we see way too much upside with this company to be in serious negotiation. So basically just saying we think the stock is too cheap now to even consider selling the stock. So when you pair their belief in the undervaluation, you've got the CEO buying the stock, you've got the executive turnover changes happening, and you have the very clear story of we're just waiting on some of these deals to come through. It's pretty clear that the whole bet here is that some of these utility deals come through, and if they do come through, when they come through, should be a very bullish situation for the stock here. So that's kind of the whole bet, is just whether these deals come through or not. And I'd argue, some of these new changes, some of these new points we pointed out would maybe lean toward the fact that some deals might be closer than they were before. So I think that's pretty interesting. Let us now go to, so as per usual, the top of most sales is going to be a lot of 10% owners selling stock, a lot of private placements, a lot of 10b5-1 plans. We got the CoreWeave IPO, still a bunch of selling from there. We've got whatever this fund is selling a bunch of Dell. Always hard to know exactly why a fund might be selling certain stocks. So Vita Coco is going to be an interesting one. They've been selling for quite a while. As you can see, the timing of sales kind of hit or miss. So not the most interesting. I think 10% owners, generally speaking, it's just really hard to know why a 10% owner might be making a certain buy or sell. If they're doing it right before like earnings or something, that could be a little more interesting, but just these kind of consistent sellings, not super interesting. Jensen was selling more stock over the weekend at Nvidia, but he's been doing that for a while, all part of a 10b5-1 plan. Some more selling here at GitLab, which this guy, GitLab, we did see some selling earlier. GitLab has been a pretty popular stock being pitched in the software sphere. I think it's been a little tough. Just the stock's been really choppy, and the insider selling has kind of always been maybe pushing a little bit against what some people believe when they're pitching the stock as a long, especially considering some of the insiders here tend to have, it's not the greatest timing in the world, but as you can see, like they tend to sell before the stock goes down. So I do think the insiders have been signaling a little less bullish than what the general market has been, or what a lot of investors I see has been on GitLab. And I think that's kind of playing out right now with the stock just being very choppy and definitely underperforming under the last little bit. So I do think maybe let's take a look at the filing just to see anything here. So this one's just flat sales. It looks like flat sales by a director here on behalf of, the company he works for. So yeah, in this case, a director selling stock, I do think it's slightly bearish. As I mentioned, the insider selling for GitLab, but I don't think the insider selling necessarily dictates the stock, going down or having really poor earnings or anything anytime soon. But I do think, it's definitely not as bullish as some of the arguments I've seen for why insiders are buying. And I actually did sell this stock not about a few months ago due to some of the insider buying. Now, the next one we're going to look at, who here we've got at Prestigen, or however you pronounce that, $18 million unscheduled buy, which is obviously always more interesting. Let's open up that. And then, so we can, we're supposed to look at Vita Coco too. I'll look at Vita Coco in a second. Let's look at Prestigen here. If we look into the filing, this is some Series B or Series A convertible perpetual preferred stock. Automatically just throws a wrench in things. Honestly, I didn't look into this one too much, but the insider just doing partial sales to convertible stock, I don't think is too crazy. By a 10% owner, again, as we mentioned, we tend to have less. They just tend, you never know why. They could have capital calls. They might, investors might need their money back. They might need to invest in something else. It's just really hard to know exactly why. And then you'd have to go figure out, like, okay, well, what are the actual terms going on here? Why are they only selling a portion of it? All that kind of stuff, I think, would back me off a little bit from being particularly interested, even though, with the stock up 150% in the last 3 months, and this person with pretty good historic returns, it looks like, would maybe lean you toward being a little more bearish. But to me, this is just that there's probably easier ones for me, at least, because this is also just not a field or an industry that I pay much attention to. So I probably would not as much, I wouldn't find this to be the highest signal. I'd go look for a simpler story, basically. So here, Vita Coco is an interesting one in that, we've had quite a bit of insider selling, so I don't know if the insider selling overall is super informative. Up 40% in the last year, so a pretty good year for them, but we are starting to see a ramp up of insider selling. You can see the 10b5-1 plans have turned back on. One of the big 10% owners here have made a pretty massive sale, $120 million, who they're the one that's made all three of these big sales. So didn't time this one particularly well, timed this one very well, and we'll see how the timing on this one goes. If we go just to look at what the company is looking like, I think we'll see a few things that might also lean us a little more bearish. You can see, so the company momentum is heading in the right direction, right? This would be one of those ones where maybe you want to wait to see when these things cross, which will happen, is likely to happen fairly soon, probably, as this will curl up a little bit and this should come down somewhere. So you could just wait and see if those cross somewhere here, in the mid 30s or high 30s probably. But the other thing is you start to see the earnings estimates coming down, the consensus coming down especially over the last 2 years. If we look a little longer, kind of went up and the stock price kind of went up with it. But now it's starting to fade and the stock price has not really started to fade with it. So this is one of those, this could be, you could start to see momentum working in the other direction here at some point, where if the stock falls below the 200-day moving average, you now have negative momentum, just as how most people, that pay attention to that kind of thing would classify it. So you'd have that negative momentum, you have negative fundamentals, and that the earnings are actually going down, assuming that actually continues to play through. And then you've got the insider selling, so three kind of bearish indicators, I'd say, could certainly make this an interesting stock to sell if you own, or maybe look at as a short if that's something that you like to do. So I do think that is a fairly interesting sell situation there. Looking at Randall Kirk's trade history here, I think this actually makes it a little more interesting, right? Because look at all the purchasing he's done, especially when you look at only Prestigen. He's only ever purchased, and he's done a terrible job at timing those purchases for the most part. But he has only ever purchased, and now we're seeing him sell for the very first time. So that is just another kind of that makes the story a little harder. They also did announce a bunch of non-dilutive financing, so I assume, right, they got this big stock pop. They announced a bunch of financing. That's how it always goes with these biotech companies, and now it's just on them to, I guess this would be the next step for me or for you if you're interested. Again, not the industry I pay that much attention to, or if I do, I would like to see insider buying before these catalysts come out. I'm not so much post catalysts when we start to try to see if they can, turn positive clinical results into positive business outcomes is not normally where I like to play in these, just because I don't know the industry. But what I would look at is, what is this fundraising for? What was this catalyst that caused this to happen? And then now, do I believe in this story of them? My hunch again is that we're moving. So the FDA approves their immunotherapy. Now it's like, what is the next step? Are they going to get acquired? That tends to be a common thing. Are they going to try to actually commercialize this product and start to sell it? Do I have faith that they can actually accomplish that? I do think, and then you tie in this insider sale does get a little more interesting when you consider the fact only ever bought before, stock now pops and he's getting out, which these buys obviously, depending on whether or not he knew how well clinical trials were going, worked out pretty well. But 10% owner is not as interesting to me. Like I said, I'm not as interested in biotech, so not something for me, but could be interesting for somebody else. Let's see if maybe we'll look at one more. Ronald Tudor continuing. We've seen him selling Tudor Perini numerous times. We've seen this guy's the CFO at Interactive Brokers, which we've seen selling. He turned back on his 10b5-1 plan. Oklo is a good one, a company making no money that's on an absolute tear, 1,500% in the last year. This stock is going to fall off a cliff at some point. Almost a guarantee. You know, it makes no money. It's worth like $19 billion or something. The highest market cap non-revenue company in the world right now. And insiders are selling like nobody believes it should be worth this much, basically. But that's just kind of the market we're in. Trying to time it is going to be a miserable experience. And you're very likely to get your face ripped off. But at some point, this thing's going to turn around. Internet not being very fast today. So at some point, this thing is going to turn around and it's going to go very poorly for this company. But you'd have to figure out when that is. So, I mean, look at this. We've got another insider selling at least 100%. The chief legal officer selling 100% of their listed holdings at least, $2.9 million. For this guy, we had the chief financial officer selling $9 million. A couple months ago, we had $33 million sales by the two co-founders. So definitely negative insider sentiment here. But again, way too hard to try to time these kind of companies, and you'd want to wait for that thing to turn around for sure, because momentum is heading heavily in the positive direction still. Another sell at Tudor Perini, continued selling here at Arista Networks, which we've seen for quite a while, though that stock has also continued to scale up. Continued selling here at CoreWeave after the post-IPO lockup, which you can see on the chart. IPO lockup here, quite a bit of selling, which is providing some downward pressure, but nothing too unusual. And I guess we can end here with just the CEO at HIMS continuing to sell the stock here, with just a pretty tough company that this one is, a pretty tough position for this company. Lots of negative news coming out. Insiders are selling as well. I think, to me personally, there's probably better healthcare providers or healthcare companies you could look at if you wanted something in the healthcare space. But you can go to CEOwatcher.com and look at all of this for yourself. And don't forget to like and subscribe, and we'll see you next time.